Welcome to Global Reports Hub. Subscribe and press the bell icon for more updates. The news broke with a force that seemed to freeze the world in its tracks. It hit like a thunderclap across global markets, sending shockwaves through every major financial center. Riyadh abandons dollar, Saudi Arabia to accept Yuan for oil, screamed the headlines. The reaction was immediate and visceral, as if the very rules of the game had changed overnight. Stock market tickers turned a deep, alarming red. Currency traders scrambled, their faces etched with panic as the US dollar took a sudden, dramatic plunge. This wasn't just another market fluctuation, it was a seismic event, a fundamental crack in the world's economic foundation, threatening to reshape the global order. In London and Hong Kong, markets nosedived and swung chaotically. Traders, glued to their screens, tried desperately to make sense of the new reality unfolding before them. For decades, oil, the world's lifeblood, was priced in US dollars, cementing America's dominance and giving the dollar unrivaled power in global trade. Now, Saudi Arabia, the linchpin of that system and the world's top oil exporter, had just walked away, signaling a dramatic shift in global alliances. In Washington, emergency meetings were convened. Lawmakers and experts gathered around tables, urgently trying to explain the magnitude of what had just happened and what it could mean for America's future. The move sent a clear message. The US-Saudi alliance was no longer unconditional. Gold prices soared as investors rushed for safety, and gas prices crept up, hinting at the economic pain to come. The decision in Riyadh rippled into the lives of ordinary people everywhere. Families checked their bills with growing anxiety, and shoppers watched prices rise, uncertain about what the future would bring. The world was reminded, our financial systems rest on fragile agreements. When a pillar falls, the whole structure trembles, and the aftershocks can be felt in every corner of the globe. The official announcement from Riyadh was brief, direct, and earth-shattering. It sent shockwaves through global markets and diplomatic circles alike, as the world realized something fundamental was about to change. Saudi Aramco, the world's largest oil producer, would begin accepting Chinese yuan for oil sales to China and other key partners. This was not just a business decision, it was a statement with far-reaching consequences. The finance minister explained that the move was part of a broader strategy to diversify revenue streams and reduce reliance on a single currency, especially the US dollar, which had dominated oil trade for decades. But the real message was clear. This was a response to years of shifting alliances and US trade policies that had strained relations. The kingdom felt undervalued and increasingly sidelined in global decision-making. Saudi leaders saw Washington's unpredictability as a growing risk, especially as American priorities shifted and new uncertainties emerged in the relationship. The choice of the yuan was highly strategic. China is now Saudi Arabia's largest trading partner and its biggest oil customer, making the partnership both practical and symbolic. Beijing had long lobbied for oil to be priced in yuan, aiming to challenge the dollar's dominance and strengthen its own currency's global role. By agreeing, Saudi Arabia was making a bold geopolitical pivot, aligning itself more closely with Asia's booming economies and signaling a new era in international relations. This was a calculated risk, breaking a decades-old pact with the US that had defined the global oil market since the 1970s. Now the kingdom was stepping into uncharted territory, facing both new opportunities and significant uncertainties about the future. Under Crown Prince Mohammed bin Salman, Saudi Arabia was signaling a new sense of confidence and independence, determined to shape its own destiny on the world stage. The kingdom would no longer be a junior partner in an American-led order, but a sovereign actor charting its own course. Instead, it would forge its own path, building new alliances and partnerships based on its own interests and vision for the future. The era of unquestioning loyalty to the dollar was over, and a new chapter in global finance and geopolitics had just begun. To truly grasp the magnitude of Saudi Arabia's recent move, we must delve into the past and understand its historical context. Our journey takes us back to the transformative era of the 1970s. In the aftermath of the 1973 oil crisis, the United States struck a pivotal deal with Saudi Arabia, offering military protection in exchange for oil priced exclusively in US dollars. This agreement set a precedent, and soon other OPEC members followed suit, giving birth to the Petrodollar system. This arrangement ensured a constant global demand for US dollars, solidifying its status as the world's primary reserve currency. As a result, the US could comfortably run trade deficits and borrow at low costs, with the world effectively financing American debt to secure energy access. For 50 years, the petrodollar system was the cornerstone of U.S. global dominance, underpinning its economic and political influence. It provided Washington with the leverage to impose economic sanctions and shielded the U.S. economy from numerous global shocks. By controlling the currency of oil, the U.S. positioned itself at the heart of the global economic network. This financial dominance was a key pillar reinforcing its political and military supremacy on the world stage. Nations around the world held vast reserves of dollars, intertwining their economic fortunes with that of the U.S. The petrodollar was more than just a pricing mechanism, it was the very architecture of the American-led global order. Saudi Arabia's recent shift represents a significant challenge to the very foundation of that power, signaling a potential shift in global dynamics. The end of the petrodollar's monopoly marks the symbolic end of singular American dominance. For decades, the dollar was the common language of global commerce, with the U.S. as its gatekeeper. Saudi Arabia's embrace of the yuan acknowledges a new multipolar reality. The world is no longer orbiting a single sun. Multiple centers of power are rising. China, with its massive economy and global ambitions, leads this shift. But other powers are asserting independence too. The move away from the dollar reflects a broader redistribution of global power. The unipolar era provided predictability. Now the rules are up for negotiation. Nations are forming new alliances, and economic blocs may soon compete for influence. The psychological impact is profound. Uncertainty now pervades the international system. The end of the petrodollar monopoly is the first tremor in a world being reshaped into something new and uncertain. Trading oil in yuan is the culmination of a slow drift in the US-Saudi relationship. America's shale boom lessened its dependence on Saudi oil, while political tensions grew over human rights and regional conflicts. Saudi Arabia, feeling exposed after weak US responses to attacks, began seeking new partners. Crown Prince Mohammed bin Salman's vision. 2030 aims to transform the kingdom, requiring massive foreign investment. China, with its capital and technology, is now indispensable to these ambitions. For MBS, securing China's partnership is essential for his transformative agenda. The US, Saudi Arabia, and China are now locked in a complex dance of competing interests. The kingdom is no longer just an American client, it's an independent player shaping its own destiny. China's long game has always included the petro-yuan. As the world's largest oil importer, China needed to break its dependence on the dollar for energy. Beijing launched yuan-denominated oil futures and linked them to gold, making the yuan more attractive to exporters. China's Belt and Road Initiative and currency swap lines have promoted the yuan globally. Each new trade deal in yuan chips away at the dollar's dominance. Saudi Arabia's acceptance of the yuan is China's biggest victory yet. It legitimizes the petro-yuan and sets a precedent for other oil producers. Russia and Iran, already under US sanctions, have embraced yuan-based trade. With a key US ally joining, others may follow. China is using its economic might to reshape the global financial system in its favor. The Saudi announcement sent shockwaves through global power corridors. In Washington, officials publicly downplayed the move but privately sensed crisis. This was a direct challenge to US financial supremacy from a longtime partner. China celebrated, hailing the decision as a step toward a more balanced global system. For Beijing, it was a strategic and symbolic victory. Other oil producers like Russia and Iran applauded and signaled intent to accelerate yuan-based trade. US-aligned Gulf states reacted cautiously, caught between China and America. Major oil importers like the EU and Japan faced new uncertainty, needing to hold more yuan. Developing nations saw opportunity in a world with multiple reserve currencies. The global economic center of gravity was shifting, and everyone was recalculating. The shift to the petro-yuan brings profound consequences. For the US, the decline in dollar demand means a weaker currency, higher import costs, and likely higher interest rates. China is the clear winner, boosting the yuan's prestige and accelerating its rise as a global reserve currency. Chinese firms gain from reduced exchange risks, and Beijing gains new economic leverage. Oil exporters benefit from more currency options but face risks with the yuan's limited convertibility. Major importers like Europe and Japan must now balance between Washington and Beijing. The biggest change is increased volatility. Currency competition replaces the stability of the petrodollar era. Markets must now price in new geopolitical risks. The transition may eventually lead to a more balanced system, but the journey will be turbulent. The global economic order is being fundamentally reordered. Saudi Arabia's embrace of the yuan is a historical inflection point. It's the most significant challenge to the dollar's supremacy in 50 years. Crown Prince Mohammed bin Salman is charting a new course. Saudi Arabia as a sovereign power broker, not a subordinate. Vision 2030 drives this strategy, with China as the key partner for capital and technology. The move sacrifices the certainty of the U.S. security umbrella for the promise of greater prosperity and independence. This moment reflects converging trends: China's rise, America's protectionism, and the decay of the old order. The petrodollar system's unraveling was inevitable. Saudi Arabia's move made it undeniable. We're entering a period of profound uncertainty where old rules no longer apply. Will the world fragment into competing currency blocks, or can a new balanced system emerge? What's certain, August 28, 2025, will be remembered as the day the world's financial axis tilted.